lot of different type of loans for a lot of different type of people.
Yes.
One of the last ones is a conventional loan.
Yeah.
Talk to me about a conventional loan and who would choose that and why they would choose that.
If you have credit 700 or over, generally the conventional, and you have funds for the down payment, generally conventional is the way to go. It is a smoother process. The rate will be a little bit higher, but you also have the ability to have risk-rated PMI. So this is the part where we talked about PMI being fixed earlier.
Okay.
On a conventional loan, it's not fixed. With American Mortgage, we do risk-based PMI, which means if you have great credit, your PMI is risk very low, which means your PMI quote is going to be also very low. If you're in a credit position where you have lower credit, that risk is higher. So they're going to charge you more for having that higher risk. So this is where having great credit, you get really rewarded out of it, actually. If really low PMI. There's a lot of different levels, like if you put 10% down, 15% down, of course that risk even goes lower, which means that PMI is reduced. So it's just a really good way of rewarding somebody who's had great credit. 3% down is the minimum conventional. There are more than a couple. There's a few products that are really good out there. Home Ready is one of them. That's a 3% down conventional loan. It's really nice. There's some quirks to it, no big deal. We work right through those, but it's still conventional, still risk-rated PMI. And then there's the standard 5% down. That is probably the easiest option. Again, risk-rated PMI. Rate is still good based on credit, based on loan to value. So again, how much they're putting down, where their credit comes in. But it really surprises me. People still think you have to have 20% down to do a conventional loan. That is just not the case.
So you're saying that the 20% is just if you don't want to pay any PMI?
Correct.
So you can do a conventional loan for 3 or 5% down.
Yes.
So that's similar to an FHA. You said 3.5%
Yep.
at an FHA. So that conventional loan is for someone with a higher credit score, and their PMI will reflect that as well too.
Exactly. Yep.
Okay.
And so we do a lot of comparisons for people, especially if they're in that little medium range of being close to the 700s
Sure.
or maybe just slightly under. We can run comparisons on as many products as they want, but typically we would be showing them what the FHA could offer versus what the conventional could offer.